Hi guys, in this video we are going to cover two very important RBI notifications which were in the headlines recently. These are the state development loans and with regard to the FCNR foreign currency non-resident bank account. So in this video we are going to focus on these two very important concepts which have very high chances of being asked in the examination. Now before proceeding forward, let us look at the relevance of this topic with respect to our examination. So for NABARD, this can be linked to the ESI portion under the topics reforms in banking financial sector and current economic and social issues. And in FM, this can be, and in RBI, this can be linked to the finance and management portion with regard to the topics regulators of banks and financial institutions and the recent developments in financial sector. So let's start with the first notification. Now this notification is about the prudential norms for classification, valuation and operation of investment portfolio by banks, and more particularly they are going to relate to valuation of state developmental loans or SDLs. So this is going to be the key focus area of this particular notification and this particular video. We are going to focus on the different aspects about the state development loans and what this particular notification has to say with regard to these loans. Now first and foremost, we must be aware about this meaning of this particular term, that is state developmental loans or SDLs. Now state development loans, they are the securities which have been issued by the states or the state governments for meeting their borrowing requirements. So the state governments, they have their needs for some of the funding of their own, and for this purpose they issue these securities, and these are termed as state developmental loans. They are similar to the securities which are issued by the central government. So central government can also issue securities and state government can also issue securities, and state government securities are popularly referred to as state developmental loans. Now these are issued to meet the budgetary needs of the state governments, and each state is allowed to borrow up to a certain limit through these particular loans. Now let's focus on some other aspects of these state development loan which will be relevant for this particular notification. So first let's talk about auction and trading of state development loans. Now these state development loans, they are basically securities, and these securities, they are auctioned by RBI through this very important system which is the negotiated dealing system. So this is the system negotiated dealing system, which is a dedicated electronic trading system for government securities and other instruments. So you have to remember that this negotiated dealing system is there for auctioning of state development loans. Now these loans, they do not have any credit risk, and in this respect they are similar to the central government security. So if the loan is being taken by some government, say state government, then these loans, they do not have generally any default risk or any credit risk as is generally associated with any other private loans. Now these are traded electronically on the RBI managed system which is popularly referred to as NDS-OM. So this system is negotiated dealing system order matching. So this is just an extension of the auctioning system. So it was negotiated dealing system, and for the purpose of trading we have added these two words, that is order matching, with this particular system. So you have to remember that this is a RBI managed system which is used for auctioning and trading of these state developmental loans. Now let's talk about the return on these state development loans. Now one remarkable feature of these loans is that it is a market oriented instrument. So you will be getting the interest rates which will be based on the market interest rates, and the governments, they use the markets to mobilize the funds for raising money for their purposes. Now the interest rate, the actual interest rate, it is going to depend on different number of factors, and one of the factors is going to be the fiscal strength of the state or the paying capacity of the state. If the state has a good fiscal strength, its numbers are good, then this means that people will be even willing to buy these securities at a lower interest rate. So this would mean higher the fiscal strength of a state, lower will be the interest rate it has to pay for these SDL borrowings, because more is the security, more is the secured these instruments are. So that is why the fiscal strength influences the interest rate on these securities in an inverse direction. Now the rate of interest on these securities are determined through auction, And one important aspect is that the interest rate on these loans, it is slightly higher than that of the central government. So this we have to remember, that these loans, they generally carry a higher interest rate than those of central government securities, because central government is the central one, it has more fiscal strength, it has more capacity, but the state governments, they have comparatively lower capacity, lower fiscal strength in this regard. So the interest rates are going to be slightly on the higher side to attract the investors. Now let's learn about who are the investors in these state development loans. Now investors in these loans, they are basically commercial banks, mutual funds, insurance companies, who are attracted by the slightly higher interest rate which is given on these loans as compared to the central government security. So the investors are mainly financial institutions including banks, mutual funds, insurance companies, etc. Now let's talk about whether these securities, they are eligible for qualification under statutory liquidity ratio and for raising funds under the liquidity adjustment facility, including the repo and the reverse repo of the RBI. Now the answer to this question is that STL securities which are issued by the states are credible collateral. So this is important, they are credible collateral for meeting the SLR requirements of the banks, as well as they are a collateral for availing the liquidity under the RBI's liquidity adjustment facility, including repo and reverse repo. So you have to remember that the answer to this question is yes, they are eligible for these cases. Now what does the notification say? Now let's come to the notification which has been issued recently. Now this notification is in reference to para number 2 of the statement on development and regulatory policies, which was issued as a part of second bi-monthly monetary policy statement for 2018-19. Now let us briefly learn what does this para has to say. Now what does this para 2 says? Now this para 2 says that as per the guidelines on the valuation and operation of investment portfolio by the banks, the state government securities are valued applying the prescribed method. So it says that when we try to value the different kinds of securities which are issued by the different institutions and which are procured by the banks, then we have to follow a prescribed method for valuing those securities as on the balance sheet date, as on the date when we are finalizing all the accounts of these particular banks. Now it has been decided that these securities issued by each state government, they should be valued based on observed prices. So there is going to be some change in the valuation of these securities. The valuation of the traded state government securities shall be at the price at which they have been traded in the market. So it is going to be the fair price. So the price at which they are trading, it means that this is the actual price or actual market price of these securities, and we should consider this price while finalizing the accounts of the financial institutions. Now in case of non-traded state government securities, now in case the securities, they are not being traded actively, the valuation shall be done based on a separate method, and this method will be a state specific weighted average method, which would be spread over the yield of the central government securities of equivalent maturity. So this would depend on the yield of the central government securities, and this would be a separate state specific method for valuing the non-traded state government securities. So this is what the para number 2 had to say on valuing the state development loans. Now what does this notification says? Now this notification says that it has been decided that the securities which are issued by the each state government, that is the state development loans, they shall be valued in a manner which would objectively reflect their, now this is the most important word of this notification, fair value. So this says that we are going to make certain changes, and now we are going to make sure that the value of these loans, they reflect the fair value based on observed prices or yields. Now when in the previous slide we learned about the two methods, about the traded and the non-traded government securities, we were just talking about valuing them on fair value basis. So broadly, if we have to say what is the change that this notification is going to bring, we have to say that now the state development loans are going to be valued on a fair value basis. Now for the purpose of this valuation, there is this very important institution which has been mentioned, which is the Financial Benchmarks India Private Limited. Now you may have heard this institution for the first time, but this is a very important institution with regard to this valuation concept. So this particular institution, FBIL, it shall make available for the prices for the valuation of these loans based on the above principles, that is the fair value principles, with effect from September 30, 2018, which should be used for valuing the state development loans from that particular date. Now till then, that is September 30, 2018, banks shall continue to value these state development loans as has been detailed in the circular dated 1st of July 2015. So this is what this notification has to say. The keywords are fair value, Financial Benchmarks India Private Limited, and valuing the loans from the cutoff date, that is September 30, 2018. Now let's move to the next notification. Now this notification, it pertains to maintenance of CRR or SLR, which are two very important ratios with regard to foreign currency assets and liabilities, and what is the reference rate for INR USD and exchange rate of other major currencies. So in this we are going to focusing on computation of reference rate with regard to finding out the CRR SLR requirements on foreign currency assets and liabilities. So this was a notification which has been issued just recently on August of 2nd, 2018. Now let's look at the background of this particular notification. Now this notification starts with these words that please refer to the previous circular of RBI, which was dated June 29, 2012 on the maintenance of CRR on FCNR scheme. So it says that with regard to this particular scheme, we are going to learn about this scheme in the coming slides, says that please refer to our previous circular in which we advised the banks that they should be guided by the reference rate with regard to maintenance of CRR on those particular assets or liabilities on the basis of reference rate announced on the Reserve Bank's website for converting the foreign assets deposits into Indian national rupees for reporting in Form A return. So it says that earlier we were using the reference rate which was announced on the Reserve Bank's website with regard to this particular scheme and the maintenance of CRR with regard to it. Now before jumping on to what the changes have been made in the calculation of reference rate and how this reference rate has to be taken, let us briefly learn about this FCNR scheme or the foreign currency non-resident bank account. Now this foreign currency non-resident bank account, the meaning of it is very much clear from the full form itself, that it is a form of a term or a fixed deposit account which is maintained in a foreign currency by a non-resident or a person of Indian origin. So these are those bank accounts which are in the form of a term or a fixed deposit and not a savings account. So this is very important. We can be directly asked this question, that we have to judge whether this statement is true or false, that FCNRB can be in the form of a savings or a fixed account. So we have to remember that this cannot be in the form of a savings account. Now since they are in a fixed deposits account or a term account, they are also referred to as FCNRB deposits. And only non-resident individuals or a person of Indian origin, they are eligible to open a foreign currency non-resident bank account with a bank. So these are the only two categories of people who are eligible to open this FCNRB account. Now let's learn more about the FCNR account. Now to begin with, this FCNR account could be opened in 4 currencies. Now these currencies, they were pound sterling, that is of UK, US dollar, Deutschmark, that is of Germany, Japanese yen of Japan. Now with effect from January 2002, there were some changes made and the acceptable currencies, they become pound sterling, US dollar, Japanese yen, and now there was a new currency, that is euro. Earlier we were considering Deutschmark, now we are considering the euro. Now in July 26, 2005, the scheme was extended to cover the deposits denominated in Canadian dollars and Australian dollars. So now these two currencies were also covered, Canadian dollars and Australian dollars. Now further, based on the recommendations of a committee which was constituted to review the facilities for individuals under the Foreign Exchange Management Act of 1999, the banks were permitted, now the scope is going to be extended again, the banks were permitted to accept FCNRB deposits in any permitted currency with effect from October 2011. So its scope was extended to any permitted currency with effect from October 2011. Now permitted currency for this purpose would mean a foreign currency which is freely convertible as defined in the FEMA regulations. So this is about the gradual expansioning of the scope of the currencies with regard to FCNR basket. Now there are the other key features of this FCNRB scheme. Now the maturity period of the deposits is generally from 1 year to 5 years, and the mode of holding can be single or joint, and the transfer from NRO account to FCNRB, it is not allowed, and the transfer to and from NRE account to and other FCNR-B accounts, it is allowed. So you cannot transfer from a non-resident ordinary account, but you can from non-resident external account. Premature withdrawals, they are allowed, but a certain penal rate is also charged with regard to this aspect. These loans can, these deposits can also be used as collateral to avail loans. Now, with regard to their repatriation, the principal and the interest earned is fully repatriable by the concerned depositor. Another important aspect of these deposits is that they are exempt from tax in India. Both the principal and the interest earned, they are exempt from tax in India. Nomination can be in the favor of resident individuals or NRI. So this is about other different aspects of this FCNR-B scheme. Now let's move to what this notification has to say. Now the Financial Benchmarks India Private Limited, so this is the organization which you have heard in the previous notification as well. Now this organization is again in news with regard to the second notification. So it says that this particular organization has taken over the process of computing and disseminating reference rates with regard to INR, USD and exchange rate for other major currencies with effect from July 10, 2018. Now before understanding this, let us briefly understand that when a bank has some foreign currency assets or liabilities in its balance sheet, now these have to be converted into Indian national rupees for the purpose of finding out how much cash reserve ratio, how much statutory liquidity ratio has to be maintained in respect of those assets or liabilities. Now in this case, it is important to understand that when we try to find this Indian national rupee worth of those foreign currency non-resident bank deposits, we have to follow a set principle. We have to follow a set reference rate. Now earlier this reference rate was being provided by the website of RBI, but now this reference rate is being provided by this another important organization, which is Financial Benchmarks India Private Limited or FBIL. So in this connection, this notification has advised that the banks shall use the conversion rates which are announced by Financial Benchmarks India Private Limited for the purpose of converting the foreign assets and liabilities for reporting in the Form A and the Form 8 return. So this change is to be brought in effect from the reporting fortnight ending July 20, 2018. So from the previous month, this change has come into picture. So you have to remember this also. So now we have to remember that now the reference rate is going to be available from the Financial Benchmark India Private Limited. This is the most important aspect. This is the most important one word which you have to remember for this particular notification. So we have learnt on the previous slide that the reference rate would be provided by Financial Benchmarks India Private Limited. But what if the reference rate is not announced by it? Now what to do? Now as regards the conversion of assets liabilities in other currencies for which no reference rate is available from FBIL. So in case the reference rate is not available from FBIL, we may have to follow an alternative rule. So in this regard, this notification is clear. It says that the banks may continue to use New York closing rate. So in this case, this rate of New York closing rate has to be used pertaining to the day end of the reporting Friday for converting such currencies into USD. So for those particular currencies, we are going to use the New York closing rate and we are going to convert those currencies into US dollar, and then we are going to use the reference rate provided by the Financial Benchmarks India Private Limited for US dollar INR of the same day for converting this into Indian national rupees. So we are going to indirectly use this FBIL rate for USD INR by finding this USD value by using the New York closing rate. Now in both the notifications, this organization, that is Financial Benchmarks India Private Limited, has a key role to play, and a chance is there that a question can directly be asked on this particular organization, that is FBIL. So let's briefly learn about this particular organization also. So let's learn about this particular organization. Now in terms of the recommendations of a committee on financial benchmarks which was set up by RBI in February 2014 to review the systems which govern the major financial benchmarks in India, FIMMDA and FEDAI, they were identified as the benchmark administrators for Indian rupee interest rate benchmarks and foreign exchange benchmarks. So this committee decided that these two organizations, that is Fixed Income Money Market and Derivative Association of India, it is going to be identified as a benchmark administrator for Indian rupee interest rate benchmarks, and this other organization, which is Foreign Exchange Dealers Association of India, it is going to be identified as a benchmark administrator for foreign exchange benchmarks. So it was decided by this particular committee. Now later, this Financial Benchmarks India Private Limited was constituted, and it was jointly promoted by these two organizations, that is Fixed Income Money Market and Derivative Association of India and Foreign Exchange Dealers Association of India, along with the Indian Banks Association. So this is how this Financial Benchmarks India Private Limited came into picture. So in this way, Financial Benchmarks India Private Limited, it was incorporated on 9th of December 2014 under the Companies Act 2013. Also, it was recognized by the RBI as an independent benchmark administrator on 2nd of July 2015. The main objective of this particular organization or company is to act as the administrator of the Indian interest rate and the foreign exchange benchmarks. So it is going to take care of both Indian interest rates as well as foreign exchange benchmarks, and it will introduce and implement policies and procedures to handle these particular benchmarks. So this is about this particular organization, which is Financial Benchmarks India Private Limited. So now let's move to some of the very important MCQs which can be framed out of these two very important notifications based on state development loans and foreign currency non-resident bank account. So let's start with the first question. Which of the following is correct regarding state developmental loans? Options are: state developmental loans are securities issued by the states for meeting their market borrowings requirements. Purpose of issuing state development loans is to meet budgetary needs of state governments. Each state can borrow up to a set limit through state development loans. So we have covered about these state development loans, and all these statements, they are correct with regard to the state development loans, and the answer to this would be option number D. All are correct. Next question. Which of the following is the name given to the system for online trading of state developmental loans? Options are: negotiated delivery system, order processing, negotiated delivery system, order matching, new dealing system, order matching, or none of the above. So this system, again, we have covered. We have seen that the online trading of these loans is done through the system of negotiated dealing system, order matching, or NDSOM. So answer to this would be option number B. Next question. Which of the following are correct regarding the rate of return on state development loan securities? Options are: the rate of interest or yield of SDL securities are determined through auction. The interest rate is usually slightly higher than that of the central government securities of matching tenure, both of the above, or none of the above. So this, again, we have covered. We have seen both these aspects of state development loan securities about the rate of return. It is decided through auction, and it is slightly higher than the central government securities. So answer would be option number C, both of the above. Next question. As per the recent notification issued by RBI with regard to the valuation of state development loans, valuation of such securities has to be done on which of the following basis? Options are: historical cost basis, fair value basis, present value basis, or none of the above. So this we have covered. We have seen that the valuation of these particular loans, it is to be done on fair value basis. So answer would be option number B. Next question. As per the recent notification issued by RBI with regard to the valuation of state development loans, which of the following organization has been tasked with making available prices for valuation of state development loans? Options are: Financial Benchmarks India Private Limited, Securities and Exchange Board of India, Clearing Corporation of India, or none of the above. So this we have seen that one of the most important organization with regard to this particular notification, it was the Financial Benchmarks India Private Limited, and this organization has been assigned the task of making available the prices for valuing state development loans. So answer would be option number A. Next question. FCNRB, or foreign currency non-resident bank account, is in the form of which of the following deposits? Options are: savings account, term or fixed deposits account, both A and B, or none of the above is correct. So this we have seen that FCNRB account is in the form of a term or a fixed deposit account. It is not a savings account. So answer would be option number B. Next question. Which of the following organizations has taken over the process of computing and disseminating the reference rate for INR USD, that is Indian National Rupee, and US dollar, and exchange rate for major currencies with effect from 10th of July 2018? Options are Financial Benchmarks India Private Limited, Securities and Exchange Board of India, Clearing Corporation of India Limited, or none of the above. So this we have seen that now the Financial Benchmarks India Private Limited is the organization which has taken over this particular process of disseminating the information with regard to the major exchange rates. So answer would be option number A. Next question. As per the recent notification issued by RBI with regard to the valuation of FCNR deposits for the purpose of cash reserve ratio for conversion of those currencies for which a reference rate is not available from Financial Benchmarks India Private Limited, banks may use which of the following rate? Options are New York closing rate, any past available rate as certified by RBI, any available rate from markets across the globe, or none of the above. So this we have seen that if the reference rate is not available from the FBIL, we have to adopt the New York closing rate. So answer would be option number A, New York closing rate. So these are the answers. So guys, this was all about two very important recent RBI notifications which were in news. One with regard to the state development loans, and the next one with regard to the valuation and the use of reference rate with regard to foreign currency non-resident bank deposits. Thank you.